Good evening, everyone. Welcome to Currency Research Club. This is our live show where I'm going to share a momentum outlook on currency. So let's quickly start with the session. We'll start with dollar index. Dollar index rallied on Friday following the release of US jobs day report, which indicated a robust labor market. This dampened the expectation that the Federal Reserve interest rate hike cycle had ended. In April, the US economy added a surprisingly 253,000 jobs, which was forecasted around 180,000, while wages experienced their highest growth in 9 months. Also the Federal Reserve and European Central Bank both raised their uh, rates by 25 basis point last week and gave varying degrees of cautions about the economic outlook, signaling to markets that rate hike may be slowing or stopping in near future. Following the data release, expectation of rate cut had been adjusted, which has resulted in higher US yields. So dollar index technically holds a support near its 100 weekly moving average, which is placed at 100.85 levels, above which could see 101.78 to 102.80 levels. However, any breakdown below 100.80 could see a downside sideways momentum up to 99.90 to 98.70 levels. Let's come to USDINR. USDINR is expected to remain within a range over a few days, with the CPI released on May 10th, Wednesday, being a key factor. And global currencies are also lacking direction as there is mixed signals about rate cut and the possibility of Fed moving towards looser monetary policy, while concern over potential banking crisis leading to sharp recessions continue to affect the risk appetite and impact the momentum of a strong Indian rupee in one direction. Technically, USD/INR spot is trading in a narrow range where it is struggling near its multiple support zone 81.67 to 81.52 levels, which is a very strong support now, where immediate resistance is near 82.09 to 82.38 levels. Overall trend remain bearish. Sell on rise strategy will be preferable for this week in USD/INR. In EURINR, Eurozone government bond yield saw a slight increase starting of the week, that is today on Monday, as the market anticipated the officials from the European Central Bank to reaffirm their commitment of raising interest rates. Eurozone bond prices may also be influenced by the US Treasuries and the upcoming release of US Consumer Price Index data, which is due on this Wednesday, provides further insight into the state of US economy amidst expectation of the Fed halting its hiking cycle. So EURINR is near to its resistance zone, which is near 90.55 to 90.90 levels, below which could see some sideways to downside market up to 89.80 to 88.90 levels. So sideways you can see, like, sell on rise will be preferable in USD in Euro INR for this week if it sustained below 90.85 levels. Let's come to GBPINR. On Friday, the GBP rose amidst dollar, pushing it higher to 1 year high. And as trader monitored that the Bank of England upcoming interest rate decision is there on 11th May. The pound received a boost after a US Federal Reserve meeting this week, in which the central bank raised their 25 basis point and but hinted that it may have reached the peak of its tightening cycle. So the pound has been supported by somewhat resilient economy that has outperformed expectation despite concern of potential recession. So technically, GBPINR has given a breakout above 103 levels, where if sustained above 102.20, we can see a bullish momentum up to 104 to 105 level, where strong immediate support is near 102.70 to 101.60 levels. So that's it for this week. For more update, please like, share, and subscribe our channel. See you all next week. Bye. Have a great week ahead. Thank you.